Good morning, Facebook. Let's do what we normally do on a Monday morning. So I've got my room session with my swing members in about 15 minutes, where we're going to go through each of the 43 markets on our watch list. But what I want to do with you guys is just have a little run through the major indices, and then we're going to talk a little bit about a trade, or in fact two trades that we're running on Euro Yen, and just explain a little bit about why I've got two trades running on the same market in the same direction. So I'll explain a little bit about that. But let's start with the major indices. Let's go and have a little look at the S&P. Here's the daily chart just here. Again, hovering around those previous highs from Thursday last week. Our guys had a winning trade off of a long, so our with the trend traders had pullback long that they entered on Tuesday the 19th. That has had a winner. The previous pullback long from further back is actually not hit target yet because of the use of a variable stop. So with the trade that was triggered on Thursday, the stop in terms of its size was smaller. Percentage risk would still be the same, but if you compare that to the previous trade, the stop was actually much bigger. So in terms of hitting a minimum 2-to-1 risk to reward, which is what we look for on this particular strategy, the more recent trade has hit target. The previous trade stop is, well, I would say for a lot of the guys, probably is at break even. Now, some of them will have kept it open. That will be dependent on how they choose to run their setups. I don't. I give the students different options in terms of data, risk, win loss, and then it's up to them how they want to use it going forward. But yes, so the more recent pullback trade, because of the smaller stop size in terms of points, has actually had the winner, and the previous one, a lot of the guys will still be running that trade, either stop at break even or running the trade with their stop in the original position. So the S&P, for me, in terms of the analysis, if we take these highs out, then obviously we will have a new high. I'll be more confident of a move on this futures market towards 3,900 if we get those highs taken out. You can see quite small trading in terms of the ranges over the last few days, but a positive week last week, so we'll see where that ends up. We'll do a just comparison on the Dow. Dow's a little bit more sideways. You can see here, slight double top, not a really big one, but a little bit of a double top. You can see it's been very consolidatory and quite choppy on the Dow. A little bit of divergence since we've broken the highs, but again, same thing here with the Dow. If we take the highs out, I'd be looking for more upside. This whole zone here is very neutral. Could give you pullback opportunities, but once below the 50, then this area in here would become very neutral. So about there, neutral for me, and I wouldn't be looking for much. In terms of shorts, price would have to do a bit more work and get down past this, get into this zone and possibly a little bit lower, and then you've got to be wary of a few little previous levels of support. So Dow, a little bit more choppy than the S&P, but similar in its outlook. Nasdaq's already up, futures up, new highs again today. I'm just looking at some of my shareholdings within my SIP, and very much in a similar boat to the Nasdaq. They're pushing up. They're very much in line with the overall move of the Nasdaq. So new highs on the futures already, up nearly 1% already today. So we'll see once the cash markets open what that does. In terms of round numbers, you could say, well, were we going to get up to 1400? We'll never know until we get there. But at the moment, price is pushing on, and there's not a lot changing at the moment. So again, I'll keep my eye on this one. Our guys had a good, again, another good pullback trade here. They're out of that one. Target's been hit. So we'll see what that does. It could pull back again, could give another opportunity. Somebody asked me last week, how many more times will you buy in with the trend on the Nasdaq? Well, there's nothing above here, so you'll keep doing it until you have the loser. So a lot of traders will say, well, how many more times would you do that? Because what they're really asking is, well, when do you think it's going to turn? Because it will turn eventually at some point, and we might have 3 or 4 pullbacks, and then we roll over, or we might have one. You don't know, so you just keep taking the setups. If there's no resistance in the way, and this is how we teach our with the trend traders, if there's no resistance in the way, then you keep taking the trades as they set up, as long as you're getting the right elements for that particular strategy. Clear higher high, and then price is doing what you want when it pulls back. But at some point, you're going to be wrong, but that's okay, because you're going to be winning, or you should be winning, more than you are risking. So the size of your wins should be greater than your losses, and at some point you're going to have a loser. You might get stopped out. Price might then make a new high, pull back and stop you out. So you might get a choppy period, but that's part and parcel of trading with the trend setups. It's not always going to be clean in terms of the pullbacks. All right, but at the moment, Nasdaq going well there. Oil. Still, speaking of choppy, the last few days that you can see, or the last 2 weeks with oil really going sideways. Monthly trade, I'm still in the second half of this. And again, I will be until the last trading day of the month, or I get stopped out. So at the moment, I still haven't reached my level to move my stop past break even. My stop on the second half of this trade is at break even, as I showed you last week. Just need price to get a little bit higher, and then I can move it up to 1 for 1. But again, for me with oil, obviously, if we take those highs out, we'll have created a new high. I'd be more confident of $55 a barrel here on the futures if we take those highs out here. So that's oil. Silver, again, very sideways. Keep a look at the daily chart here. Again, can't really make up its mind. Had a little higher high we talked about start of the year. It's had a higher low, but in the moment, very sideways, stuck between its 21 and 50 moving average. You can see it here. Not really doing a lot. Gold, slightly down on the day, but and slightly different its pattern, but again, a little bit similar. Hasn't made a clear high, but has made a higher low start of last week. But again, not really going anywhere. Stuck in this little area here. Go and have a little look at Euro. So let's go and have a little look at Euro before we go and look at my trade. We'll look at Euro. So again, Euro slightly longer pullback here. So you see we came down to the 21, went through there, found a little bit of a reaction short term at the 50, and that's turned into about a 35, 30-ish% retracement here. But again, at the moment, still stuck between that 50. So nice bounce off the 50, but stuck between the 50 and the 21. But if we get above this level, there's no reason why we couldn't see a retest of the highs. So again, slightly deeper pullback here. Didn't make it back to the trend line or the previous resistance. But yeah, Euro, as it currently stands, is not offering me a trade because the pullback was quite steep. Some traders will have taken a pullback further down, so towards the 50. So they may have had a trade here. My guys are usually trading at a slightly higher level or slightly smaller pullback. But again, fairly decent pullback here. So if you trade with a little bit more discretion, that could have been an opportunity there. If we just look at the weekly chart on Euro, because of previous resistance, we can get a bit of perspective here. So if we look, so there's the weekly 21 previous resistance. So there is clean air between here. The 2018 highs are right up here. So I wouldn't consider a reversal or any kind of reversal trades until we got up to this level. But if I was in a with the trend trade, I would be wary of just these highs here. So if I can get the right risk to reward ratio, or I could get the risk to reward, I'm not in this, but if I could get the right risk to reward, or you're somebody that's looking to go long, then you want to bear in mind that the highs, there's a few just high candles or the zone, and you don't really want to be taking a with the trend trade right up to the level. You would want to be taking some profit or securing some profit, or at least taking the risk off the table before you got right up to the highs. So for me, against the trend trades would be up here. Any with the trend trades, I wouldn't hold it right to that point. I would be out slightly before. So there's a little bit of an area there where I wouldn't want to be in the trade, and I'd wait to see what the price did, and then that would potentially give me further indication of whether I could trade against the trend. Obviously, if we went straight through that level and that level didn't hold up this time, then that could offer more with the trend opportunities further up. So again, Euro, a little bit of clean air, and then we get into the 2018 highs. So that's Euro US dollar. In terms of Euro yen, so if we have a little look at Euro yen, we've got a couple of positions running here. So I've got one position where the stop is at break even, and I've got, that's Aussie yen, I want Euro yen, and I've got one position that I've entered recently. So if we look at this weekly chart, you'll see that we've come into the 2019 highs, and it is also the 218 highs. So we've come into this resistance zone. So I established a short position. Now that hasn't hit target yet. I'm going to go down the time frames. So that hasn't hit target yet. If we look at the 4 hour, so that position was established here. I'll just show you the chart so you can see it. So I've got quite a few few trades running, but we're focused primarily on the euro yen trade here, or the 2 euro yen position. So you'll see them here. I've got a sell and I've got a sell in here. So you can see that one of these two, you can see one of these two orders, the stop loss is at the entry. So you can see here the earlier trade that was a more aggressive entry, the stops at break even because we reached the 2-to-1 level. Price has moved up from that point and it's offered us another trade on another strategy. So for me, people say, well, why would you take two trades? Because surely now you're over leveraged. Well, my argument is on that I'm not over leveraged. Yes, over the short term, I've got one position running on here. So I've got one position running, stops at break even. Now I didn't take, and this is really important, I didn't take the second position because the first position stop was at break even. They are two separate strategies. The initial reversal trade was more aggressive, up nearer the resistance zone. The second one required price to break the trend line and give us a pullback from that point. So we needed to break the trend line first. So the second strategy, so the second trade set up based on its criteria. So both of these trades I'm running based on the strategy criteria. So short term, you could think, well, you've got two trades running in the same direction on the same pair. Are you not over leveraged? And the answer is no, because each strategy is being judged over the long term based on that strategy's performance. I can't control whether some trades I'm going to be in a position where I'm running two trades at the same time on the same market, or running three trades on three different markets at the same time, or having a period where I'm just ticking along one trade, closing out, next trade after the next trade. So I don't worry about the fact that short term I'm in the same market twice because they're two separate strategies. That's very different than trading one setup and placing two trades on the same setup, or doubling your risk on one setup. I'm not for doing that. There's no reason, because on that first trade, that I should enter it with, say, a 2% risk instead of a 1% risk. So very clear. The fact is I'm treating each trade individually based on that particular strategy. And the fact that I've got my stop at break even on the first trade is nothing to do with why I'm in the second trade. That's purely because that is the rules based on that strategy. So this is very much our focus at TSC, which is, yes, we use discretion to establish our levels and we test all our levels for all of our strategies. But once we're taking the trades, it's very strict strategy criteria rules. All right. That's me done. Hope that was useful. Well, when will I be back? I will be back probably tomorrow. I'll definitely be doing a Thursday video. So if I can, I'll be back with you tomorrow. And yeah, trade safe, and I'll catch up with you soon.